Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the chart. In this video, I will be speaking about EURUSD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, the first thing that we must notice is that at the moment we have a market which is testing a quite significant level of monthly demand and support. In fact, from here, multiple rejections to the upside were created every single time that the market tested its zone. We can see again here the market tested the level, rejected it to the upside, again here tested and respected as support after this fake breakout to the downside. And at the moment the market is testing once again the exact same level from which there is good probability of seeing a potential rejection to the upside away from the zone. We can also notice that if we zoom in closer, in testing this level, the market is also currently creating a bullish pattern, which is essentially this monthly M pattern here. In general, after the creation of an M pattern, as we said many times, what we could expect is a rejection to the upside for the completion of the pattern at the neckline, which is the previous support turned resistance here from a monthly perspective. So here on the monthly, we could expect a potential rejection to the upside for the completion of the pattern at this previous support turned resistance, rejecting the monthly demand and support that we have just identified. Dropping down on the weekly time frame, what do we see? Now, from a weekly standpoint, it seems like this market has created a massive impulse to the downside and is currently in need of a correction. In fact, no market just goes down in a straight line. Every market from time to time will create corrections along the way, and that is the sign of a healthy market, because if you have just a move to the downside straight down, if for example this move to the downside would have been just straight down, that would have been a quite unhealthy market. In fact, we can clearly see how we had a lot of impulses and corrections along the way to the downside, which clearly indicate that we have a healthy downtrend with a series of lower lows and lower highs. Now, in this specific case, we do not have that. We have just a straight line to the downside, which means that this market is currently overextended to the downside and in need of a correction higher, which is also confirmed by what we have already seen on the monthly, since this market is currently testing a strong monthly demand and support and also creating a monthly M pattern. Going down on the daily time frame, what do we see? Now, from a daily standpoint, first of all, I did speak about EURUSD a few times in the past. I spoke about it after this impulse and correction. From here, I explained all the reasons for which we could expect this rejection lower. And again, I explained all the reasons for which we could expect this correction and continuation to the downside. And again, that is exactly what the market gave us. And by the way, I will link in description those previous analysis, so you can go and check them out for more free education. However, as we were saying, at the moment we are inside of a strong monthly demand and support area. Now, from a pattern standpoint, we have here an impulse and correction. After an impulse, if you want to measure the correction, you have to take your Fibonacci from the high to the low of the impulse leg. And if we do that, we can clearly see how the market is currently testing the area in between the 0.32 and 50% of the Fibonacci taken on the impulse leg. From here, there is the possibility of seeing a potential rejection to the downside. However, since we have support all across this area, and this is also the previous low, if the market will create a move lower and essentially go and test again this area, inside of this support and demand, potentially also with a stop hunt of all the stop losses that are below this low. So with a nice wick here, this is a quite interesting reversal area, inside of which there is the possibility of seeing the rejection to the upside start, which is the rejection that we already wanted to see by looking at the monthly and weekly timeframes. So this is a quite interesting area, inside of which we could see some institutional longing, further increasing the probabilities of a potential rejection to the upside away from this level. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, so what institutions are doing, we can see that net positions clearly have been decreased. We went from 178K all the way down to only 98K net positions, showing how institutions have been moving to the bearish side of the euro. However, that is clearly priced in. The market has been trending to the downside quite aggressively, fueled by this institutional shorting. And now we can see with the new report that institutions have once again started adding longs as well. We can see that they already started adding 4,000 longs with the last report. Now, if the market will enter inside of this support area again, there is a good probability of seeing more institutional longing at that point, increasing the probabilities of a potential rejection to the upside away from this level. So if the market will reach this support zone, how we could be approaching this potential reversal higher. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential reversal higher away from the zone for the completion of this double bottom here from a daily perspective. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to get access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here past the testimonials, you will see that at the moment there is a massive special promotion in which you have a huge discount on the upfront price of the program from $497 all the way down to only $97 one-time payment. And if you scroll lower, you will see that at the moment the time to join with this special promotion is almost over, so I really suggest to go and check it out as soon as possible. And directly from here there is the button to join in order to gain automatically access with the email and password that you will create during the checkout process. So I really suggest to go and check it out as soon as possible before the offer ends and price goes back to normal. The link is also in the description and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below and I will see you in my next video.